DSCR for residential investment. Hey, what's going on, everybody? It's Jeff Trevarthen, Jeff the Mortgage Pro. Thanks so much for watching today. I really appreciate it. Today, we're going to talk about my favorite topic, DSCR loans, and this is for residential investment properties. And it's one of my favorite loans to do. I'm doing a ton of them, and I want to be able to help you with it as well. So we're going to go through kind of a little bit about what a DSCR loan is here first, and then we'll talk a little bit more about what the DSCR guidelines entail. And if you have any questions about that, you can always click on my calendar link down below, and I'd love to schedule an appointment with you and talk to you more about that. Before I get into it, do me a huge favor. If you would please click on the like button down below. If you like these videos, really helps get these out, my message out to as many people as possible, investors across the country who are trying to buy investment property. And then if you really like my stuff and you want to subscribe, go ahead and do that too. I'd love to have you be part of my community, and hopefully you get more information about some different types of loans from me as well going forward. Okay. So let's talk about DSCR loans. What are they? So if you're somebody who wants to buy residential real estate as an investment property, anywhere from 1 to 4 units, this is probably a good option for you. Now, it's not the only option, but I think it's probably one of the best options that's available for investors trying to buy investment property. So maybe you don't know where to go, or maybe you have properties but no job. This is something that's going to be able to solve your problems, because you can definitely do a DSCR loan on property without a job. Okay, that's the cool thing. So here's the DSCR loan, and this is what it is. There's 4 basic factors that matter when we're doing these types of loans. Credit is number 1. Okay, so you gotta have good credit for these. Down payment is number 2. You gotta have typically 20% down. You can do as little as 15, but it doesn't cash flow as well with 15, and it may not even cash flow at 50% down. So 20% down is typically required. You need to have reserves, so money left over in the bank after you're done, just in case somebody misses a mortgage or somebody misses their rent payment. You have to make the mortgage payment. Can you do so going forward? So you have to have reserves. And then lastly, cash flow is really important with these, because the income coming in has to be greater than the expenses going out on the property. Okay, so those are the 4 main things that DSCR involves. Believe me when I say this, there are so many people out there that qualify for a DSCR loan. There's so many opportunities for DSCR loans, purchases for investment properties all across the country, and I can definitely help you out with those. Okay, so let's get into a little bit about what entails and kind of some of the guidelines on DSCR loans to kind of go back to why credit, down payment, reserves, and cash flow are so important. So the DSCR, what does it stand for? It stands for debt service coverage ratio. So what we're looking for is the income coming in has to be greater than the expenses going out. So if that's the case, that means the debt service coverage ratio is going to be 1.0 or greater. The farther it away from it is above 1, the better that property is going to cash flow going forward. So that's a good thing. So if you can find something that's DSCRing at twice the amount of the mortgage payment, that's huge. That's going to be a great loan and a great property for you to buy. And that's the basics of a DSCR loan. So you don't have to have a job for this type of loan. You don't need it. We don't need any, bank stamp, we don't need any tax returns. We don't need any W-2s. We don't need any pay stubs, nothing like that. No proof of income is required for these. So you don't have to have any income at all. You can have no job and you can still get a DSCR loan as long as you qualify. So for these, we can do loan amounts up to $3 million. Again, these are for investment properties only, anywhere from 1 to 4 units. These are for purchases, rate and term refinances, and cash out refinances going forward. There's no personal income or employment required, just like I mentioned a few minutes ago. There's no limit to the number of properties you have, and there's no limit to the number of financed properties you have. So you can have as many as you want, right? Some lenders will put a restriction on the number of properties you have financed with them, but that doesn't mean you can go somewhere else and get another DSCR loan for another property. So, I've seen people who have 100 properties financed, believe it or not. It's crazy, but it's out there, right? And I've seen people who don't have any properties financed, and you need to get this loan still. Okay. There's 30-year fixed options. There's 40-year fixed options. There's ARM products available, usually a 5-1 and a 7-1 type of an ARM. I don't find that the pricing is any better on the ARMs, so most people just stick with the 30-year or the 40-year amortization. And then there's also interest only available. So you can do the interest only on that 30-year option or the 40-year option. And it's usually a 10-year interest only period before you'd have to go into the fully amortization period on those types of loans. So 10 years of interest only, that's pretty good. And hopefully you'll be able to have an exit strategy for 10 years on some of these, so you could refinance out of it if you needed to, or sell it at some point, do a 1031 exchange up to a new property. But interest only is definitely available. And what I like to do is just, let's compare. Hey, let's look at a 30-year, let's look at a 40-year amortization, let's look at a 30-year interest only and a 40-year interest only, and figure out, hey, which one's going to cash flow the best for us here? And that's the loan that you probably want to go with, because cash flow is the most important when you're dealing with DSCR type loans. You have to have reserves, like I mentioned before, as little as 3 months worth of reserves. And remember, a reserve is just 1 month worth of principal, interest, taxes, and insurance monthly payment. And if you multiply that by 3 months, that's how much you need to have left over. And this can be in stocks or bonds or 401ks or IRAs or checking accounts or saving accounts or anything like that can be used as reserves. And it's not money you have to put into the transaction. It's just money that has to be available in case you need to make a mortgage payment because the renter didn't make their mortgage payment. It's just a risk factor that lenders use, and that's why we have to have reserves on these types of loans. You can do as little as 15% down. Okay, that's crazy. Conventional loans, same thing. If you're buying an investor property with a conventional loan, but with DSCR, as little as 15% down. Now, between 15 and 20% down, most loans would have mortgage insurance associated with them, but DSCR loans do not have mortgage insurance. So that's a huge benefit. But if you're between 15 and 20% down, lenders are just going to price that anyway. So the rate on those is going to be a lot higher than it would be if you were just to get to 20% down. So 20% down is what I like to try to recommend clients get to. If you get to 25% down or 25% equity, that's even better. When you're refinancing property, you can go up to 75% loan to value. That means you have to still maintain 25% equity when you're doing these types of loans. Okay. So as little as 15% down, but more likely 20% is probably going to be the best or better. And then 25% is going to be the best in terms of down payment. Now, you can be a first-time investor and still get a DSCR loan. Typically, first-time investors are going to have to put 20% down minimum. So make sure that you kind of fall into that category if that's, you're buying your first property with a DSCR loan. First-time home buyers are okay, but the amount of first-time home buyer / first-time investor lenders out there are minimal, and they're going to make you probably put 25% down typically to be able to buy your very first home as an investment property with a DSCR loan. But once you do the first one, guess what? You're no longer a first-time home buyer and you're no longer a first-time investor. So the whole playbook just kind of opens up for you, going forward from that. So, but first-time home buyers are okay, and I've worked with plenty of them, and you can definitely do it too. Okay, you can go credit scores down to 620. Are the rates going to be great? No, they're definitely not going to be great on the 620 credit score, and you're probably going to have to put 35% down to be able to buy a property with a DSCR loan with a credit score like that. The better the credit, the better the terms. Usually if you have a 680 credit score or better, we're pretty good for being able to get a DSCR loan for 20% down. If you have 740 or better for credit score, you're going to have optimal terms going forward with this type of loan. Okay. We can buy short-term rentals with these. So that's a cool thing. If you're going to be buying your first property as a short-term rental, so if you're a first-time investor, you're probably going to need to put an extra 5% down, so 25% down on those. But you can absolutely do short-term rentals with these types of loans. In fact, I have lots of clients that are doing those things just right now. You can buy non-warrantable condos. So what is non-warrantable condo? It just means that the property has litigation on it, and conventional financing isn't going to work because it's non-warrantable. So DSCR loans are okay because you're putting a pretty good chunk of change as a down payment on there. Although what I would say is that I don't always recommend people buying condos just because of hefty HOA fees, and those continue to go up over time typically, and they're starting to get pretty expensive, especially in major beach towns and ski resort towns and things of that nature. So, if you have to buy a condo, awesome. That's great. That's still a good investment property as long as the numbers work. But, remember that HOA is also going to count towards the principal, interest, tax, and insurance and HOA monthly payment. And you have to consider that with your cash flow going forward as well. All right. So those are the basics of DSCR loans. If you have any questions at all, or if you want to be the one that, learns how to do these, I'd love to be the one that helps you. I'm going to put my calendar link down below, and please click on it. Let's schedule a time to talk, and let's see if we can help you get your property with a DSCR loan, whether it's a refinance or a purchase. I'm the guy that's going to help you out. Have a great day, guys, and I'll look forward to talking to you on the next show. Bye.